Welcome to Trading Lounge and the indices, and starting with the S&P here. We're on the 1000 ticks, so we're on the intraday basis here. I just wanted to talk about the current trade. So what we can do, we've been long here, we've had the stop here, we've taken part profit here. Yesterday we talked about an entry above this price point here, and the reason for that is that we had a reasonable A, B, C pattern here, but we know wave fours can get quite complicated, so now we can view this a little bit differently. We can also bring this down to this high. We could also bring it down to this high here as well. What I would like to do though is I would like to bring the stop up to this point. You could also bring it up a little bit higher to this one here. That shouldn't be breached as well. So we won't have it at 490. We'll just drop it down into 460. We'll just leave it here for the time being. It's okay. And we need to look at taking money off the table anywhere above that particular high point of the third wave here, and we'll be looking for, well, wave 5 of 3 here, and then 4, and then wave 5 up through to here. This wave 4 may get sort of a little bit uglier as well, but and drop below this, but we want to tighten things up here anyway. Now, this particular move to the upside, we'll better talk about the bigger picture, because the NASDAQ and the S&P are a little bit different, but that takes care of this situation. So if this is correct, we're just looking for something of this nature here for this. Now, this would be a top in the market. So if we just go to, let's just go to the weekly chart and shoot the breeze a little bit on the bigger picture, and then we'll move in and have a look at it. Now, we're at 4.5. Now, 5 is halfway between 4,000 and 5,000, obviously, but 5 is the second strongest number, so it's you know, there's a bit of a you know, when you listen to the media, if the market turns bullish, then everything is bullish, and then if it's sort of bearish, everything is bearish. So just got to take that with a bit of a pinch of salt. But I don't think that even if the market is going to be bullish, it's not going to go very fast from this number of 4,500. The 500 is the important point here. It's also at the close to 2 old highs here as well. So I don't think that it's going to go very far at this point. Okay, and yeah, I got the stochastics running very fast just to pick tops and bottoms, but now, there's different ways to look at all of this particular pattern here. We can look at it bearish and bullish, but one of the key points that I wanted to talk about is that the NASDAQ has taken out the top here. Now, with the NASDAQ, we've got stocks like Microsoft was one of the first to take this top out here. Meta Platforms has done that. Microsoft is doing that. Did Amazon take the top out? I can't recall. So some are and some not. So as I mentioned before, what's going to happen in the market is that this current high here, we've got this high. So we've got some markets that are going to take out this top, and have done. And when a market takes out a top, they normally turn lower at that point, and we're counting 5 waves up here for those. Now, the other pattern in the market is that this is a top and the market's come down. So you've got stocks like Google and so on that have pushed up here in their own way, but they'll probably not make a new high here. But when this tops out here and turns, you know, the market's a bit like a herd of sheep. They'll all pretty much do the same thing, so they will come down. So we're going to end up with a situation where some markets have made new highs and some haven't, but they will all turn together. So the counts will be slightly different on that note, and if I'm proven wrong and all of these here end up making a new high here, well, you know, that will be that then. So this S&P here, there's obviously bullish counts to it and bearish counts. We can have it like this as 1 and 2 and 1 and 2 here. That would be fine, and we could also look at this move up here, we could also look at this as wave one coming up here, and then we would, at the old high here, look, be it at the high, be it above the high, be it just slightly below the high, it doesn't really matter. But if it was going to be a wave one up here, for instance, let's just shoot the breeze on that, then we would look to go long above that B wave here, once we can confirm that the move down here is indeed corrective at that point. So we're not going to miss anything to the upside. And as I mentioned, the markets are not going to go anywhere around this old high here for a while. Okay, so it's not like we're going to miss anything, and it's not like we have to do anything. We've done what we needed to do and make money, and that's it, you know, in stocks and indices and so on. So look, that would be a bullish count. We could also view the bullish count sort of in line with other markets as well, and we could do that in terms of just removing this here and putting wave one here and wave two over here. So if the S&P doesn't make a new high, the market will move up here and then come back, and then we can move up from that point. So there's a variety of ways to look at this. We could also look at this larger pattern here in a slightly different way as well. We've been looking at it in a triangle pattern as well. I don't think it's the case, but it doesn't hurt to talk about them, you know what I mean? So this would simply just be an A wave, an ABC for the B wave, an A and a B and a C wave down here, then a D and then an E, and then go up from that point. That's also possible as well. Okay, so like I said, it doesn't hurt to, you know, explore these. Obviously, at the end of the day, our primary objective is to make money, and we can do that really on the intraday. Now, sometimes in the bigger picture, we know what things are once patterns have developed, you know. I mean, if we do get a triangle here, then we'll know what we need to do over here, you know. But there are times in Elliott or in any patterns or any trading, you're not sure about things. So all of that said, let's just go back to, we don't need to go back to the weekly pattern. So this is the daily pattern here. So I always like to be conservative first, and I like to have a look at the, you know, the most obvious, the closest possible scenario, and that would be that we know that the trend up in indices and stocks and all that is finishing, you know, is close to a top, you know, and like I said, we're at a large number here, so we also need to be a little bit mindful as well. I do think Friday and Monday can deliver us more highs. So in this case here, we'd be looking for the A wave here, the B wave here, and the C wave, you know, coming down here until proven otherwise. We can have it as wave 4 here. That's also a possibility as well, because those markets like the NASDAQ that have made new highs, they have wave 4s here and then going up for wave 5s over here. But, you know, like I said, what happens if, you know, half of the markets don't make a new high over there? How do we count that, you know? So that's it. So I'm just really focused on the intraday basis here, and within that, if I go to the, I think the 20,000 tick might even have the bullish count on it. I'll just check. No. But anyway, in this case here, all we're looking for here, I want to point out is 1, 2, 3, 4 here, and then 5 to the upside. So that can be 1 or 2 sessions to the upside and finish that off. And also too, here at the 5,000, if you're familiar with TradingLounge and its weirdness, so we've got this at this 500 here. If it's going to be bullish, we would end up getting a pattern like this here. So the classic trading levels pattern. So we've got the arrival, the reaction, the first high above the level. This would be the wave 5 coming up here. So the wave 5. So if we do get, you know, this particular pattern here, we will look to go long over here. So this will be the arrival, the reaction, the first high above the level, and then there would be some type of ABC pattern here, and if this top here is breached, then we'll definitely look to go long at that point. Okay, we can see here on on this particular instance here that we should be pushing up there. And Wednesday and Thursday, as I mentioned, normally have a lot of a handful of financial news announcements that come out on the Wednesdays and Thursdays, and so that's that. And then Friday can normally be sort of bullish, so this is what we're looking for here at the moment, to be bullish on this side. So you can look for at least 5 waves up there, but taking that top out. This is quite a big accumulation process here, so we may end up going higher than what I've got it there for. So a trailing stop is probably better than a take profit. As such, there will be problems at this old high here. You can sort of round that out. So the 20, 45, 50, so above the 500 here, 10, 20 and 30 make up group 1 at that point. Okay, I don't think I've updated the tick chart on the 100 tick on this, so no, so that doesn't matter. So that's the S&P. This is the, I'll put this under here, this is the SPY, of course, so we should see a move above that top over here for that. And the NASDAQ, what have we got here? The daily chart. So the NASDAQ has just taken out the top here. So we really need to look at this as 5 waves up. Now, with impulse waves, there's ways of extending them higher, but they need to breach certain other structures first. So I always start with a conservative move. I'm seeing, like, from this point here, I've got 1, 2, 3, 4, and I'm looking for one more high here. So that's the top that I'm looking for, but that doesn't really have to be the top. I could extend this structure out here further, but this is where stocks are telling me that I need to be as 3, 4, 5 here. So, and in one way or another, I need to look at this here as a 5-wave structure here, and then we're looking at 5 waves in the last wave structure here. That's how I'm looking at it. And in this case here, we also need to look at the NASDAQ because it's the big tech stocks are leading to the upside. When this does top out here, I'm thinking that worst case scenario is that we have some sort of ABC pattern here before going higher. Okay, so that's what we're considering. Now, obviously, there's bullishness in the air. We've got China and America, having a cup of tea, so to speak, and all financial figures are looking quite good and all the rest of it. But in the markets, for some reason, we always get the opposite of what we're looking at. So if we're looking at a correction, then we'll get a trend. If we're looking at a trend, then we're going to get a correction, and so on. Now, if this is going to push higher, then we'll be all over it as well. And obviously, at the 16,000 is the closest, largest number. So that's really the price point that we're working with and will need to work with. And at the 20k here, have I updated that here? Yeah, so I'll just look at this here. So wave 3, 4, and going up 4, wave 5 here. Now, also here as well, we've got group 2 here, so we can look at group 1, which is 100, 200, and 300. That's really the basic swing range for when we're working with. It's all about this number here. That's the main central theme here, and we can see that by it being sold off here. This is group 1 above and group 2 below. That will be the natural swing range for this. It'll be a classic trading levels pattern as the arrival, the reaction, the first high above the level, some sort of, if it's going to be more bullish, there'll be some sort of ABC here, and then it's going to go up again, and we'll catch it over here, we'll catch it over here further, and all of that sort of stuff, But otherwise, we'll look for it to have a larger correction here of wave 5, 5 of 5 of 1 here. Now, that could be wrong, and I don't care about being wrong. I just care about making money. So that's where our focus is at the moment with this. And we need to talk about any trades that we have on here as well. So we've been in and out of this trend, and currently we're in this situation here. We're talked about going long here because of the ABC pattern here, but it didn't get triggered in. Doesn't mean that you're a loser or anything like that. It just means that it is what it is, you know. I don't take things, I try not to take things emotionally. It's a bit tricky being human. So yeah, we can I'm going to bring the stop up under here for this now. Once that gets triggered, that should be okay at that point. But this could get ugly, but it's pretty, you know, it's pretty ugly as it is, so that's okay. So we'll look at this up here. You can take profit anywhere above, just move that out the way for a moment. Take anywhere at the 16 is fine. Now it's you know, I mean, obviously if it's going to give 1, 2, 3 coming around the top here somewhere, 4 here and 5 here, you know, it's going to have some sell-off here for this, you know. So I like to be sort of just under the level before the sell-off. But yeah, I mean, look, Friday and Monday could be bullish, and this could be just wave 1 here and then 2 and 3 and coming up into group 1 and that type of thing. So it could go higher here. So don't get upset about, you know, woulda, coulda, shoulda and all of those sort of things. If you want to get higher, then use a trading stop, but if you get it too close, you're going to burn your fingers. So I'll leave all that with you on that one there. But yeah, and if once we get up here, we're not going to have any trades for a bit. You know, we just got to wait for this to play out here, the arrival, the reaction, the first high above the level, and then some sort of ABC pattern in here. I don't particularly like shorting against just trading against the trend anyway, you know, unless there's good reasons or you're just simply bored, but that's when you lose money. So you got to have some sort of rules, and if you do trade in zones that you're not supposed to, then make sure you're just doing half positions or thirds or something. Rightio, so yeah, that's that. So yeah, all good. Okay, the Nikkei, don't need that. Dow Jones, it's got another little push to the upside here, 1, 2, 3, 4, 5. I could probably drop that down. Anyway, we don't have a trade on that, not interested in it that much. Come over to the Russell here. This is the CFD product. It's on a daily chart. We're all looking for an A and a B and a C. See, this is no way it's going to make a new high up here. Do you know what I mean? And we've got 5 waves down here. Now, sure, it could be wave 1 and 2 and 1 and 2 here and keep building to the upside. But if that's going to be the case, don't worry about it. We're going to catch it over here anyway. But in the meantime here, I think there's one more little push to the upside here to make this here as an A and a B and a C wave here. And anything above that top there, then we can look to go long, but we'll get a set up for that. Otherwise, we'll get another low to come in here as an A and a B and a C wave. Just to look inside that a little bit more onto the ETF for this would be wave A, B, and I'm thinking 1 and 2, and then 1, 2, 3, 4, 5 here for the third, the fourth, and then the fifth up here. But if we get this here as 1, 2, 3, 4, if we get one more low in here, that's going to give me 5 waves to the downside, and if that's the case, then we're going to have to put that in over here for that. And if we do get 5 waves down here, then we're going to get a 3-wave counter trend, and then we're going to be down again. So we'll be looking to do the short trade at that point, you know. But we can see the stochastics here just set on normal settings. You know, looks like it wants to sort of push up there. If you want to go long here, use that number here, the 7720 at that point. That's all of group 2 there. You should know the trading levels if you're by now with that. So it's all of group 2. So yeah, so far, yeah. Yeah, that's, I mean, I don't think it's one of the better trades, but that's that. And then we come over to the DAX, and this is the daily chart for the DAX. That's the top there, and there's different ways to count it to the top there. I can see at least 2 ways to count it to the top, but it doesn't really matter about that at the moment. The main point here is that this is twofold. So first of all, we know that the move here is an A and a B and a C wave here is corrective. So that means that sometime in the future we're going to take that top out. So I think that's a useful bit of information. The next thing here is that, well, if it is a corrective pattern, well, we could just go straight up from there. Nothing's in a straight line, of course, but we could just go straight up and make new highs up there. So that's possible, okay? if that was going to be the case, we would also be working with 16,000 here as well, which is above the 61.8%, and would look for a classic trading levels pattern on the 16,000 to move higher. But we're not there yet, so we don't have to concern ourselves with that. If my count on this market will follow the S&P and, so on. So in this case here, we can look at this as an A and a B and 1, 2, 3, 4, 5 up here. So in this instance, we'll be looking for another little move up here. And if this is correct, then we'll come down to here, and then this will be wave 2. So we could look at this here as an A and a B and a C wave. That's possible, and that could be wave 2. Or we have to look at this as the A, the B, and the C for wave 2 over here. So I don't know which is correct, and I don't even know, if the 16,000 becomes a classic trading levels pattern here, well then simply we're just going to go long at that point. That's what we're going to do. So all of this is a bit of a guessing game at this point. But yeah, there's a lot of stocks, in the US that are suggesting that we can pull down here, and it's not like this has made a new high up here of any of that. And sure, this could be wave 1 and 2 here, and 3. It will be basically 3, 4, and 5 up here. Do you know what I mean? It'll be 1, 2, 3, 4, 5. So we've got plenty of time, because what you see here in a trend is not what you get next. You're always getting the opposite of what we're getting next. And at this point, we're in the later stages of at least this trend, So I'm not missing anything, nothing to really, do anything at this particular point. I don't know what I've got. I don't know what charts I've updated. Okay, so this is just a clearer little version of this here. So sure, this could be wave 1 and 2 here, but otherwise an A and a B and C and 1 and 2 and 3 and 4 in here, and then 5 up here for this, may reach the 16,000, may go past it, may fall short of all of that. So a trailing stop is a good stop, and we'll just go into 1,000 here for this. So we've got, so that's the A and the B here. So we've got 1, 2, 3, 4, 5 for 1 and 2 here. And I've done a fair bit of work on this on the tick chart and stuff, so I'm quite happy with this count. So 1 and 2 here, and 3 and 4 coming up here, and 3 and 4, and then 1, 2, 3, 4, 5 up here for the third. So I'm thinking this is the fourth here. Could get a bit small, could get a little bit bigger, but if the S&P is going to push up, then this can push up, but we'll see what happens in Asia. So we don't need this here now. I'm going to bring this up. We don't want to get it. We took part profit here, so I'm just going to bring this up to this number here. And yeah, so at the 720 here, right? Well, that could actually be 722.5, by the way, but it doesn't really matter. If the market's going to come down, it's going to come down, it's going to bounce off that, it's going to come this way, and then it's going to go down. So you'd wait for that first low below the level, and then you put your stop under that. And if this market is going to go down under that low, then you don't want to be in it at that point anyway. But, you want to give it a little bit of space here. This wave 4 looks a little bit, the wave 4s are always complicated. So we could get something, we could get some little B wave up here, and then some sort of C wave coming down here. There's fantastic support all through here, and then push up at that point. If that's the case, you're also leaving this little top here exposed, which you can go long on. And then this move up here, it may reach the 16,000, it may fall short and just, flirt around with the 900 or something like that. I'm not quite sure, but you want a trailing stop here. So pretty much, what I normally find is that the third wave comes in around the top there, so we should get a bit more of a push. It should get up there, but, so a trailing stop at that point. If this top is taken out here, then move the stop up to this low here, if that's breached, which it probably will be. So I forget what I said with all of this now, because when I close the program, all this squashes up, but yeah, so that's that, really. That's all good. It should just follow the S&P anyway. And then the FTSE's in a world of its own, unfortunately. So obviously we're in some sort of corrective pattern here. So this is yeah, so sorry, just sort of thinking. So there's a couple of things that can happen here. We were looking for an ABC pattern here. It's not really giving me the ABC pattern that I was looking for. It's giving me 3 waves here, 3 waves here, and 3 waves here. So I've just WXY'd it. It's also possible for this to come in over here as an X wave and then have another little push to the upside here to get this wave D here, and then we'll come down for wave E here. Now, if the US markets and the other markets do come down, well, then it's obviously going to bring this down. Now, as far as I'm concerned, this move from that low here, this move, that first leg there, that's in 3 waves. So to me, this is a corrective pattern. So that means at some point we need to take that low out. Now, we could do this in 2 ways. We could have this as wave D and then wave E over here, or this could push up here. We'll talk about that in a moment. But there's 2 things that can happen here. We can either come deeper down here, or we can just come a shallow move down here. So these lows can be breached here quite easily, and still be a triangle as well. I've seen triangles where wave E takes, takes everything out from the low and all the rest of it. So anyway, this little pattern in here, we'll just check on that, and on the 1000. So let's just have a look at this. So I did, last time we spoke, I had this as an A wave, a B wave, and we're looking for the C wave up there. I can actually squeeze 5 waves out of there, but you won't like me. We've got definitely 3 waves here, right? So it makes this whole leg corrective. So that means this low should be breached at some point. And then we've come up for this wave, and then we've had an A and a B and a C wave in here for this. Well, we had it as a B wave. We can look at it as an X wave here now, and then I'll look at this as an A and a B, and I could put the A wave over here. That's probably, yeah, but I really get 5 waves down there. So the trouble with working around large numbers, you've got a couple of zeros here, so it's large enough. It just pulls the price to it. So sometimes the Elliott count can just be sort of like look really weird, but on the cash market, this has got 5 waves up here, and that's the high on the cash. So we do get 5 waves here. So we have pulled down here. This is 1, 2, 3, 4, 5 here. This is 1, 1, and 2. This is probably let me just have a look in here. We can look at that as 1, 1, 2, 3, 4, 5. Yeah, we could have one more low and still have a C wave here. We still could have that here and then go up. So there's a couple of things that could occur here. Is that this market could just have another low and have an ABC pattern here, while the other markets around the world make new highs and then come down. Or this market's going to move up here and have a C wave and then move down. It's not a pretty picture either way. Okay, so I don't know which way it's going to dance, but we don't need to do anything in this space at the moment. The risk group, it's okay, intraday trading, day trading, it doesn't matter what day it is, and it doesn't, matter what the larger pattern is, but looking for a trend here, or even a swing trade, it's a bit of a different story. Now, obviously, there's really good support at this particular number, so we're seeing the bounce at the moment, and it could follow the rest of the market up. So as a day trader, you could find something in there on that. If this pushes up too much over here, then you could also look for a little classic trading levels pattern on the 450, the midpoint here, and then look to move up to the 500 and get out at that point. But yeah, it's going to get complicated in here, so I'm not really going to worry about it. And the Australian market's kind of the same, really. The Australian market, the English market, kind of move together on an intraday basis reasonably well together. So let me just go back here into, say, 10,000 ticks here. So we've been looking at this up here as the A wave, the B wave, and the C wave up here. Now, we've had some trades in here and done very well, and we've traded in here and we got stopped out with the move down here, but still had a profit, so can't complain too much. Yeah, so look, this could be bullish as well. You know, I was just looking at it as the A, the B, and the C wave up here. But I can count this quite nicely here as 5 waves in here as well. I'll just shoot the breeze here for a moment. So we can go 1, 2, 3, 4, 5, and then 1, 2, 3, 4, 5 in here. And then have to look at this as a 3rd wave, 4th wave, and a 5th wave here for wave 3, 4, and 5 at this point. I should really update these to a bigger picture here. But I can count this here as an A wave, a B wave, and then all the way down for a C wave here. This is 1, 2, 3, 4, 5 for 1, nice sharp wave 2, then 1 and 2, and all the way down for 3, 4, and 5 here, and then 4, and then 5 here. So that can be the low here. I mean, it also could do, unfortunately, come back up into this space here, and then come down again at this point. But if the US markets are going to push up for Friday and Monday, then we could probably get a bit of a run out of this, you know. So if we just investigate, you know, a bullish case here, I mean, it looks pretty perky at the moment, doesn't it? So we could view this here. Let's just give it a bit of a, let's just go positive for a moment. So this would be 1 and 2 and 1 and 2 here. This would be a 3. So we'd probably get a wave 3 up here for this, and then a wave 4 here, and then a wave 5 up here, and then we'll look for an A and a B and a C wave here. So the idea would be, if I was to trade this, you know, I probably would have gone long above this top here based on that 5 waves here and this being corrective, but that's long gone. So the next thing here is we really need to allow wave 3 to, it may or may not, see how these not reach the top, so it may or may not reach the top here, but then there'll be a wave 4 pulling back 40%, so you can look at that, and then the wave 5 here. So the wave 5 could be the same length as wave 1, and then there'll be some sort of ABC pattern here. So then it really makes the entry at the B wave here. That's where that would be. And based on those 5 waves, and then based on this corrective wave here, and then based on the B wave taken out. So it's starting to tick some boxes at that point, you know. So that would be one way to move into it. That's sorry, I'm just rechecking. I could do that, configure that a different way, but it doesn't really matter. We're still left with that low. So I don't know if this is going to give us 5 waves, okay? There's a good case for it. How far it goes as well is another situation. It does sort of make the markets a little bit bullish at this point, I'd have to say. Yeah, and then one of the other things too, it's always good to everybody's got their own thing, of course, is to take that top here and that bottom here and just understand where the 23, the 38, the 50 is, and all of these here, because they will play out. It's just good to know where they are, and if you can gravitate to the closest largest number, then that will be fine. So yeah, I don't know if this is going to give us 5, but if it does, then all good to go at that point. I think we should push up. You know, that's the thing. How far we go is the question. I mean, the other side too is that the 50-60% would be here. So getting close to the 100 here would be a nice place to, you know, to exit at that point. Once the market's in group 2 here and got support in here, then you can lift your stop up, you know, under this 65 here at 62. Okay, I'll leave it at that. Thanks for tuning in. Cheers.